Man, here you go. We got IBM. What we want to show is that we were just talking about that first video and that volatility hooked down to that 170.73, and after hours this big pop. Look at it now. It's 179. That big blue is off to the races, and that's going to gap up the market. Let me try to find out a little bit more about the conference call. The thing that I enjoy is knowing why it would go higher. And the big shakedown here that MMT's witnessed, we all know that that's what it did. Dropped almost $5. And if you have the bids down there, you get hit. Now look at it. Why did they do that? Why did they do that? In most percentage cases, is because this is part of the manipulative, crooked mechanical systems that these people do in the bid and ask up here and disappear from the bid. No one is there. It creates a price print, and then off it goes. MMTs. And this is the truth. So you know. That's the most important thing, is not because it did it, but why did it do it, and who's behind it, and who creates it, and where does it come from, MMTs. And the knee-jerk after hours. They got to buy IBM almost $5 cheaper than the close. And that's why they do it. And how do they do it? They do it like this. I'll show you. This whole bid right here drops away, and then they sell way down here. That's how they create that knee-jerk reaction. And then that's how we get hit, and we go higher. We're $4 above the close. Give me one moment, MMT. So I think I might be a little bit locked up there as far as the price goes.
179.30.
Yes, you are. Okay, and I am locked up where they beat by 7 cents. I want people to know it. The estimated service backlog at June was 144 billion, up 15 billion year over year at actual rates of 2 billion, adjusting for a currency negative, or give a few, take a few. But let's talk about this. They beat by 7 cents. That's the preliminary, so that's $3.09 per share. Okay. The estimates were for $3.02. They rose 12.4% year to year to 26.67 billion versus the 25.32 billion consensus. That's good. They beat that number, like we were talking about. The company came out and gave the upside guidance. This will go on your list. IBM will go into an overbought process to what we call an extreme short-term overbought cycle that will sell up at the highs intraday, pull back $2 or $3, and then get net long again. It's going to be a very good trading range. Put this on your list, MMTs, just like you did when it proved itself. Now, let's also talk about this. Growth market revenue was up 23%, 13% adjusting for currency. But business analytic revenues was up more than 20% in the first half. Cloud revenue are on track to double in 2011. And see, there were some key things in here that we wanted to know. All right? That's one of them. The gross margins of 46.8% versus 46.0%, that was the street expectations. So we know that part of what the street was thinking. But here's the thing, MMT. Company gives upside guidance. The EPS above consensus. And learning how to buy that dip that we all went through this live. Did we not? Did we all go through with having limit orders way down there before the report?
We did.
Okay. And that was $9 ago. All right. And you can see where we're at now. We can see where we're at right now. Let's just watch the price action. Let's see if it pulls back a little bit. Okay? Let's see if it does it. I'm going to lose this one because I am locked up. So
I can cancel that order now, can I?
You can. Yeah, you would have canceled that a long time ago. I mean, and
Well, I
what?
wasn't going to hit it, but you told me to keep it out there.
Yeah, I did for the knee jerk, but that didn't mean it would stay out there. Once it started to make its move, as it did, you would just transact your entry, right?
That's right.
That's right. So we know when to do. It got there within, a dollar or so. Once it bounces, you hit buy. It's close enough, but was still $5 almost. So if you buy $4 below the market, can you go wrong? No. We cannot go wrong. So it's all about the knee-jerk reaction that is going to create these moves and who's behind it. And I just said it in the video. And it happens every day during earnings season. That's the other important part. Does anybody have any questions about the drop-down bid and earnings? Because you're going to see a lot of it. Does anybody have any questions?
Yeah, I do.
Okay.
Would you put out, before the market, would you put out 2 orders possibly? One a little higher than the other to make sure you got hit?
Yes. I would.
Okay.
You put the short one out just like you do the bottom one, Chuck. So you put the limit order out up there, $4 or $5 above the market, and $4 to $5 below the market, so that what each event, whichever one comes first on the actual knee-jerk reaction, is that's what we're going to need. Okay, that's what we're going to want to have happen.
Well, my question was possibly a double order at the bottom and a double order at the top. Would you do that?
Oh, yes. You can put out like one. Let's say you had one at 69.50, and say you had one at 70.50. Say you had one at 71 and a quarter. That way, when it does come shooting down in that wick, you're going to get a piece of it. That's what you're asking.
Right. That's what I wanted to know.
Yes, and that's exactly what you'll be doing, Chuck.
Okay.
Consistently. Okay.
Well, it's been fun.
How do you know if it's $4 or $5?
Well,
3 or 6.
Because I'm on a live video, but we use our application, and you know what that is, right? So we go in there and we get those prices from there, and that's where we put them. That's where we get the prices from. In the negative ratio price action deltas, and then the positive delta ratios to the upside. That's where we get those numbers, everybody. They don't come from anywhere else. Okay, because the system, the SMF platform, as you already know, right, Tom? It already has it priced, doesn't it?
Right.
Okay. You're just learning, and you're probably just flabbergasted about how these people can just walk away from that bid and create that low print like that, right?
Yeah, trying to follow that. You were saying, if you want to just explain that one more time, how do they corrupt that?
They walk away. They disappear. You see where the people are willing to buy? They leave. They're gone. And then what happens is way down here, Tom, way down here, from way up here, they leave and they start making prints down here. That's how they cause that. There is no other way, Tom. So they disappear. They leave. There's no one there. Then they sell down. They create a sell here. And then everyone else starts selling very quickly, and then it reverses immediately. Does that make sense to you in that way?
Now, when you say they leave, how do they leave? It's other people like myself?
There is no more print here. You see,
there's no buyer.
170. There's no buyer here. It's not lined. They're gone. It happens so fast in milliseconds you don't even see it. You got to be looking at it. There are prices way down here that they start selling to. So what do? 2 things. One, they disappear. No print. Sorry. What's the next print? Whatever you see down here, what does someone do? They sell it. Then that's where the emotional part kicks in, and that's how the mechanical part works.
Oh, I get it. So they just erase those people and then put them back.
Ah, right, Tom.
Is that the market maker getting his shares for tomorrow?
Market maker's not involved in after hours.
Okay.
They're gone home for the day. They'll deal with this tomorrow.
Yes, they will.
with the public buy and sell transactions anyway. Brian Plain, can you end the recorder for me, because it seemed to have locked up, sir? So that's the way it happens. You're right. Here, I finally got to put the frickin' thing on pause, man. I'm still running, so I'm just going to end it.